Welcome to Accounting for SS1 at LightTech Academy. Today we study the balance sheet, assets and liabilities. What is a balance sheet? The balance sheet is a statement of financial position showing all the assets, what the business owns, liabilities, what the business owes, and capital, the owner's investment, at a specific date, usually the last day of the financial year. It is not an account, it does not have debit and credit sides. It is a snapshot of the business at one moment in time. Important, the balance sheet is based on the accounting equation. Assets equals liabilities plus capital. Structure of the balance sheet. Section 1, Fixed assets, non-current assets. Fixed assets are assets held for long-term use in the business, not for resale. Examples, land and buildings, motor vehicles, machinery and equipment, furniture and fittings, goodwill and intangible. Presented as cost, provision for depreciation equals net book value, NBV. Section 2, Current assets. Current assets are assets expected to be converted into cash within 1 year or the normal operating cycle. Examples, in order of increasing liquidity, least liquid first stock, closing stock, debtors, less provision for bad debts, prepayments, bank, cash. Note, in accounting, we list current assets in order of liquidity, stock is least liquid, takes time to sell, cash is most liquid. Section 3, Current liabilities. Amounts owed that must be repaid within 1 year. Examples, creditors, bank overdraft, accrued expenses, tax payable, dividends payable. Net current assets, working capital, equals current assets, current liabilities. Section 4, Long-term liabilities. Amounts owed repayable in more than 1 year. Examples, long-term loans, mortgage, debentures. Section 5, Capital, owner's equity. Capital equals opening capital plus net profit, drawings. Or, capital equals opening capital, net loss, drawings. Drawings, money or goods taken by the owner for personal use, reduces capital. Format of the balance sheet, vertical format, commonly used in Nigeria for WAEC. Balance sheet as at December 31, 2025. Fixed assets. Premises at cost 2 million Nigerian nairas. Less, depreciation, nil. NBV 2 million Nigerian nairas. Motor vehicle at cost 5 million Nigerian nairas. Less, PROV for depreciation, 1,800,000 Nigerian nairas. NBV 3,200,000 Nigerian nairas. Total fixed assets, 5,200,000 Nigerian nairas. Current assets. Closing stock 90,000 Nigerian nairas. Debtors 120,000 Nigerian nairas. Prepayments 8,000 Nigerian nairas. Bank 85,000 Nigerian nairas. Cash 12,000 Nigerian nairas. Total current assets 315,000 Nigerian nairas. Less current liabilities. Creditors 60,000 Nigerian nairas. Accrued expenses 5,000 Nigerian nairas. Total current liabilities 65,000 Nigerian nairas. Net current assets, working capital 250,000 Nigerian nairas. Net assets, total fixed assets plus net current assets 5,450,000 Nigerian nairas. Less long-term liabilities. Bank loan 500,000 Nigerian nairas. Net assets less long-term liabilities, 4,950,000 Nigerian nairas. Financed by capital. Opening capital 4,829,000 Nigerian nairas. Add, net profit 121,000 Nigerian nairas. Less, drawings, 0 Nigerian nairas. Closing capital 4,950,000 Nigerian nairas. Financial ratios from the balance sheet. 1. Working capital ratio, current ratio, equals current assets / current liabilities. Ideal, 2:1. 2. Quick ratio, asset test, equals, per current assets, stock, / current liabilities. Ideal, 1:1. 3. Return on capital employed, ROCE, equals net profit / capital employed x 100. Remember, balance sheet equals statement of financial position equals shows assets plus liabilities plus capital at a specific date equals not an account equals snapshot of business at one moment. Accounting equation, assets equals liabilities plus capital. Sections, fixed assets / non-current assets equals assets held for long-term use not for resale equals examples land plus buildings plus motor vehicles plus machinery plus furniture plus goodwill equals presented as cost minus provision for depreciation equals net book value. Current assets equals expected to be converted into cash within 1 year equals listed in order of liquidity / least to most liquid equals stock / closing plus debtors less provision for bad debts plus prepayments plus bank plus cash. Current liabilities equals amounts owed to be repaid within 1 year equals creditors plus bank overdraft plus accrued expenses plus tax payable. Net current assets / working capital equals current assets minus current liabilities. Long-term liabilities equals amounts owed repayable in more than 1 year equals long-term loans plus mortgage plus debentures. Capital / owner's equity equals opening capital plus net profit minus drawings equals or opening capital minus net loss minus drawings. Drawings equals money or goods taken by owner for personal use equals reduces capital. Financial ratios, working capital ratio / current ratio equals current assets divided by current liabilities equals ideal 2:1. Quick ratio / acid test at face current assets minus stock divided by current liabilities equals ideal 1:1. ROCE equals net profit divided by capital employed x 100. Thank you and keep excelling at LightTech Academy, powered by LightTech Solutions Limited.